Plug Power was once a $1,500 stock. Today, it trades at just $2. So the big question that everyone's wondering is Plug Power the ultimate comeback play or just another money pit in clean energy? Well, in this video, I'm going to cover what I love about the stock and what could make the stock skyrocket from here. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. It's a good thing because I'm not here to sell you some overpriced products. I don't do hype. I break down the numbers so retail investors like you can make smarter, more confident decisions with your money. And here's what I see. Plug Power just tripled its electrolyzer revenue year over year, opened the largest green hydrogen plant in the United States, and secured big-name clients like Amazon and Walmart. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So here's what you need to know. Plug Power, they're not just making hydrogen tech. It wants to own the entire supply chain: electrolyzers, fuel cells, hydrogen hubs, and fueling frameworks. The company was founded in 1997, and Plug Power went public in 1999 at $1.17 a share. And during the dot-com bubble, it skyrocketed to $1,565 before crashing back down to earth. Today, its main product line is GenDrive, which powers warehouse equipment like forklifts. Instead of charging batteries, workers just refuel with hydrogen, zero downtime, making an obvious no-brainer for logistics-heavy companies. Then we have Plug Power's Gen Echo electrolyzers, and these split water into hydrogen and oxygen, allowing customers to generate their own hydrogen on site using grid or renewable power. Plug is also building hydrogen hubs in Georgia and Louisiana, which can power the entire hydrogen ecosystem using their own tech. And here's the kicker. Their clients currently include Amazon, Walmart, BMW, AT&T, and even Home Depot. When giants like that bet on your tech, it means they see the long-term potential. So what about the stock? Well, if you zoom out, Plug's story looks brutal. From $1.17 at its IPO to $1,565 in 2000, the stock has suffered quite considerably. The stock has a 60-month beta of 2.09, meaning it's more than twice as volatile as the broad market. But right now, Plug trades at $2.37, up 57% since my last video, 11% year-to-date, and 15% over the last year. That's a solid bounce, but wait, don't get too comfortable. There are risks, which I'll cover in my next video. So if you haven't already, be sure to hit those like and subscribe buttons so you won't miss it. So, what could make Plug Power stock soar again? Well, this is where things start to get interesting. Stick with me here, right? Because analysts, they expect the electrolyzer market to hit $52 billion by 2030, up from less than $500 million in 2023. That's 100x growth in just 7 years. Plug's electrolyzer revenue already tripled year over year, hitting $45 million in Q2, and the company is sitting on 8 gigawatts of basic engineering contracts. And what makes those contracts powerful is the way they're structured. Plug gets paid up front for engineering work, which later converts into full equipment sales. Think of it as getting paid twice, first to design and then to deliver. For example, one facility deal alone can bring in $120 million in revenue. Multiply that across dozens of projects, and now I think you can begin to see the potential scale. Second, Plug Power, they're producing their own hydrogen. Historically, Plug was the largest buyer of liquid hydrogen, an expensive problem. But now with 3 plants online producing around 40 tons a day, Plug Power is flipping that weakness into a strength. And then at Georgia's plant, the largest green hydrogen facility in the United States, just had its strongest month ever. 324 metric tons produced with 97% uptime and nearly 100% availability. Producing its own hydrogen slashes costs and opens new revenue streams. In fact, Plug even launched a spot pricing program this year, letting buyers purchase green hydrogen on demand instead of being locked into long-term contracts. And that's a big move. It makes Plug not just a buyer, but now a market maker. And there's more. The U.S. just restored the 30% investment tax credit for fuel cells through the end of 2032 and extended the hydrogen production tax credit up to $3 per kilogram for projects breaking ground before 2028. And this isn't policy. It's direct fuel for Plug Power's bottom line. So is Plug Power a buy? Well, a consensus among 23 Wall Street analysts rated a hold with an average rating of 3.09, consistent over the last 3 months. The high price target is $4.50, which suggests as much as 90% upside from here over the next year. So here's my take. Plug Power, it's a volatile, high-risk, and policy-dependent stock, and it's still unprofitable. But it's cutting losses, growing revenue, and locking in strategic partnerships. If Plug Power can string together 3 consecutive profitable quarters, Plug could now transform themselves from a fallen dot-com relic into a true clean energy leader. For me, Plug Power is a long-term potential bet. They have all the pieces to be a massive success, right? New plants, tax credits, and blue chip clients. The only question is whether they can finally put all of the pieces of the puzzle together. Do you believe they can? Let me know in the comments below. And while you're there, don't forget to like and subscribe. It helps others find this video, supports the channel, and ensures you won't miss my next deep dive. Thank you so much for watching, and I'll see you next time.